Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it bull trap question mark because, you know, based on what just happened on with the Dow, the S&P, and the Nasdaq, is the Dow leading us higher and leading the other indices that are going to follow to higher highs in here, or is the Dow setting a bull trap? I'm going to make the case that I think we're either at an extreme or very close to extreme on this bear market rally, and therefore it's setting a bull trap. So let's start off here. We're going to look at the Dow Industrials today. We're looking to look at the Russell 2000 ETF, IWM. I'm going to look at several of the indicators, and then I'm going to look at Google, Microsoft, Meta, Amazon, Apple on a weekly basis just to see how they compare after the earnings that came out this last week. Okay, the Dow this last week up 1779, the S&P up 148, and the Nasdaq Composite up 243. The thing that really jumps out at you is the size of the candles in here, the range. Big move up with the Dow Industrials, big range. And then the same thing when you look over here in the S&P, it's a lot smaller. And then it gets even smaller when you look at the range over here on the Nasdaq Composite. All right, let's take a look at the Dow Industrials. Okay, here's the Elliott Wave picture that I've got, and this hasn't changed. The only thing that's changed is we got a little bit deeper retracement in here on this double zigzag pattern than we anticipated. But let's just take a look at it. So here's intermediate wave 1, 5 waves down, intermediate wave 2. This was very strong breath that occurred in late July into early August. Very strong breath, okay? And then now we've had 5 waves down in here for minor 1, and now we've got this strong retracement move that's gone up here. We're a little bit shy of 78.6% on the move back up. But let's just start with the retracement. Let's just talk about that for a minute. Look at the kind of retracements that the Dow has done, okay? Here's the first move down, really. And it got, yes, greater than 61.8%, did not get to 78.6, but that's pretty deep in terms of the retracement. Okay, let's just take the next one. We come down to a lower low. What's the next one that we do down to a lower low? Look how we came up all the way up here to 88.7%. And then we started to come south. But then in March, or actually April, we actually got slightly above that level on the pullback, extremely deep. So where are we now? We're not even to the 78.6% when you compare what happened in the March-April timeframe. So yeah, this is deep. Have we been deeper? Yes, in terms of the bear market rallies that have occurred. Okay, and then this move right here, I think I just talked about that, but let me just show it to you again. If I did, let me just show you. Here's what happened on the intermediate wave 2. We got just a little bit above 61.8% on the pullback. So here we're sitting at the exact number is 75.2% on the retracement from intraday high, low to intraday high. What about these boxes? We've had 6 days in a row up. The last time we had 6 days in a row over here, ending on May 27th. So remember that date, May 27th, 6 days in a row. But you can see the momentum was very, very strong. As a matter of fact, the McClellan oscillator reading, that's what MO stands for, McClellan oscillator, was 354. It's the strongest reading of the year. Well, guess what? We're right here at the second strongest reading. We had one reading that was about equal to where we are now, right here in the midst of this strong move. But for all intents and purposes, this is the only one that's higher than where we are right now at plus 289. And let me just show you that on the chart here. Let me see if I can get this a little bit better. So here's where we are, sitting at 353.60. And here's where I was talking about over here on May 27th, 354 when you round it. Okay, so yeah, we are stretching the rubber band. When you're plus over 150, you're extremely overbought. Below minus 150, you're extremely oversold. We are stretching the rubber band very, very hard. And it's interesting that we're doing that at the end of 6 days in a row, very similar to May 27th. One other thing that jumps out at you, when you look at the RSI, we're sitting at 78.7. See that number on the right? 78.7 for the reading on Friday. Could it push a little bit higher? Sure. But that's where we are right now after 6 days up. Well, when you go back over, where is another reading that's almost equal to that? Right here on April 15th, 1 day from the peak, okay, we're sitting at 78.3. And then you get to the peak and you get a reading of 80.6, and that was it. And then we rolled on over. So we're very, very close to, I mean, this was the highest readings that we were getting for the year, okay, because this is all the data, right? This is from January coming on down, and here we are. So there are several readings that are telling us that we are as extremely overbought as we've been at different points this year. So that's the picture there. I want to show you one other indicator. Let me pull up the percent of stocks above their 200-day moving average on the S&P 500. We're sitting at 36%. Well, if you go back over to May 27th, we're sitting at 37%. So almost the exact same level. Then we ran into, some chop, and we rolled back over down hard into June, into mid-June. So this is what I'm expecting we'll see. It's kind of interesting that we're at almost the exact same level on this indicator also. All right, let's take a look at the Russell 2000 ETF, and I'm going to go back over here. Here's the moving average view. I want to take a look at the Elliott Wave picture. So I've got the same labeling, although the peak on the Russell was back in November, right? So it's been in a decline a couple of months before the Dow and the S&P 500. So intermediate wave 1 down, intermediate wave 2 back up. Now we've come down to the first wave down. We got slightly below that June level with minor 1. Now I believe we're in working our way back up in minor wave 2. So what have we retraced? Just a little bit over 50% at this point. Now, when I drill down and take a look at the 195-minute chart, and some people, if you're not familiar, would say, well, why 195? Well, it cuts the 6.5-hour day into 2 equal bars of 195 minutes. So here's what we're looking at. I think it counts best as an A, B, C simple zigzag, mainly because of what we're seeing with this impulsive wave in here for the C wave. Okay, nice little zigzag pattern, sharp pullback for 2, sideways for wave 4. So what am I looking at with these little Fibonacci relationships in here? Well, the first one is 2 versus 1. Okay, I've talked about that, 61.8%. So if we continue to push a little higher, yeah, we could push up into that level. The next numbers I'd be looking at is the relationship between C and A, right? So in a zigzag, the first level you look at is equality, so 100%. Well, we're well above 100%. Matter of fact, we've edged above 138.2%, which would be my next target. And then beyond that, 161.8%. The next thing I'm going to look at is wave 5, Roman numeral little blue Roman numeral 5 versus little I1 here, okay? The relationship between the 5th wave of an impulse and the first wave. Well, there's 2 things you look for, either equality or a Fibonacci relationship. Well, here's the next numbers on the Fibonacci relationship, 50%, 61.8%. Well, it's interesting how these 2 line up. So if this were to continue pushing higher Monday, Tuesday, this is what I'd be looking at. I push up to 185.25-ish. in that area. So we'll see if that holds. We're also getting some divergence here on the RSI with this last little move up that occurred on Friday. So that's the picture that we've got. Looking for this to roll over. I just talked about where the indicators are in terms of being extremely overbought. We definitely are. Let's take a look at these FAANG stocks that reported this last week, starting off with Google was the first one out of the box. Okay, here's the picture on Alphabet or Google. I always still call it Google, just like I still call Meta Facebook. Down $4.84 on the week. So we came back off the low. Here's the picture as compared to the March 2020 low in here. So it's from peak to low, we're about halfway there in terms of getting there. But this was the first one out of the box on Friday. You can see we're in a solid downtrend. And then the next one we look at is Microsoft. We'll see how this compares. Okay, so a little bit stronger in terms of being holding up in here, but down 6.25%. Let me see if I can line it up a little bit. It's because of the scale. It's because of the length of the scale, and that's why I've got it on semi-log. Okay, is because of the whenever it's greater than 3 to 1 in here, you got to start looking at that. I mean, if you take it off of semi-log, I mean, here's the picture. It doesn't really, short-term wise, it doesn't change it that much. Okay, let me adjust it. And so now we're in a pretty solid downtrend. Again, this is a weekly view, but look how the moving averages have turned it down. They're all aligned to the downside in here. But Microsoft did not take out that early October low, at least not yet. That was Tuesday. And then on Wednesday, we got Meta. And of course, this was a disaster. Down $30.81 this last week. And you can see Meta has been trading below the March 2020 low this is the 5th week in a row that it has closed below that low of 137.10. So this one, Netflix, I wasn't going to talk about Netflix, but I'll just show you. Here's how Netflix has pulled back up right to that level, basically, that area, 290.25. Let's take a look at Amazon. That was the next one that came out on Thursday, down $15.91. It's rapidly approaching 81.30 in terms of the March 2020 low. Again, everything aligned to the downside in terms of the moving averages on a weekly view. And yes, they've taken out the June lows in here. Now, the strongest player of all of them is Apple. And of course, that had a big move up this week, up $8.47, the big rally that occurred on Friday. Pretty stunning rally. Now, I'm skeptical of it because of the move, because of what Apple has a tendency to do in terms of the big retracement type moves, kind of like what I just talked about with the Dow Industrials. Big swinging moves back up. Big swinging moves back up. And now we're getting something like that. But you know what? All the moving averages are aligned. The 10-week is below the 21-week, below the 55. So we'll see how long does this hold up? How long does it take before it takes out the June lows in here? But Apple led the Dow higher. It accounted for quite a bit of the points on Friday. Okay, that's the view here on those stocks, basically all the FAANG-M stocks, I guess you could call it. We'll see what kind of follow through we get this coming week. All right, everyone, that's it for today. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.